Trump's been very adamant that rates need to come down from where they're at, and this chart helps explain why there is such an intense focus on lowering interest rates right now. And it is because as debt levels, as federal debt levels have swelled, the interest expense on U.S. debt outstanding is just absolutely exploding higher. So what this chart on here shows is it shows the green line is the interest expense on U.S. debt corresponding to scale over here. So this is the absolute level. The blue line is that interest expense relative to GDP. And no matter how you want to measure it, you can see both lines have just absolutely exploded higher since about 2022. This was coming out of the pandemic where there's a lot of borrowing to fund economic stimulus, and the deficits have not stopped. There's still projected to be up to a $2 trillion based on current forecast deficit this year. So these figures are not slowing by any stretch. And as these these interest expense payments are surging higher, that's where a big part of the focus is on lowering rates, because a lot of it's directed toward wanting to bring down borrowing rates to assist things like the housing market. But in the back, you have this lurking in the background too, that this interest expense on government debt has just been surging high.